Hey, how's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group. Today's topic I want to discuss with you tax-deferred annuity plans and what's so important about these types of contracts and whether or not you could leverage them for your specific retirement situation. Typically, individuals they're basically preparing for retirement. They understand that each day they save more and more money into different types of retirement accounts, such as a 401k, such as an IRA, 403b, or just simply just cash accounts at a bank. Now, one of the different structures or how an annuity plan could really help out this specific situation is if this individual wants to try to hit their retirement successfully and they want to try to accumulate these accounts for a later date in time that they could pull money from those accounts, in retirement. So what do I mean by that? Well, let's say if you have a person that's age 50 and they have some money in their old 401k account or an old IRA account or whatever that is, and they understand that this money is deemed specifically for retirement income purposes, meaning this money, they're not trying to accumulate it anymore. They just want to have something that's going to accumulate safely till they're in their 60s, 70s, whenever their specific retirement age goal is. And at that point in time, they're going to be able to pull out money from that bucket after it accumulated on a lifetime income manner, kind of like a personal pension plan, like a pension aspect, but it's on a private side. It's not on through an employer. It's through an individual and an individual directly to an insurance company. So that's kind of what explains an annuity contract. What I mean by this is let's take that person that's age 50 and they understand that they want to retire at age 65 and they have $1 million in an IRA account. Well, they might have a specific income goal that they said, okay, at exactly age 65, I want to make sure that I have exactly $50,000 that's coming to me every single year to the day I pass away. I'm age 65. If I live to 100, I don't have to worry about it. If I live to only 70, I don't have to worry about it. But I want to make sure that there's a specific dollar amount that's coming to me year by year by year. And kind of where the mistake is made is individuals that accumulate assets. They do it by utilizing the stock market and utilizing different mutual funds and bonds and indexes and derivatives and all these different intricate things to accumulate this bucket of money. And that's fine. And that's exactly what we're trying to do. What we recommend you to do is just basically stay the course. Now, once you start coming towards your 50s, towards your 60s, and you understand you're within 20 years, 25 years of retirement, you have to now start planning for worst case scenario and understanding that there's a specific type of risk aspect when you're looking purely for the return aspect. Now, if you've already accumulated specific dollars in your bucket and you just want to basically get to that finish line and accumulate and not lose anything when the market crashes, but still get good growth when the market goes up, not lose anything when the market crashes, this is where specific types of annuity plans can really help you out. The one that I'll be talking about today is one that I really like leveraging, especially in today's times. Now, it might be different in a couple of years from now, but right now, the best contracts that I've noticed and that I've helped out individuals on have been hybrid annuities or different types of blends of the hybrid annuity concept. What this does is it allows that individual that's age 50 to take their money, let's say it's $1 million, but yet their income goal is $50,000. Well, maybe out of that $1 million that they have in qualified monies or they might have in cash, maybe to get the specific dollar amount, it might be $700,000. It's not leveraging the full $1 million. So what happens here is you could take the $700,000 and purchase something known as a hybrid annuity or a tax-deferred hybrid annuity or a tax-deferred annuity, whatever that type of contract is that you decide. And what you're doing is this money is purchased through an insurance company. Only insurance companies could offer annuities. And what this insurance company does is it gives you a type of insurance a income insurance that you could never outlive that specific dollar amount that they offer you. So if you had $700,000 in your age 50 and you say, okay, I want to have a worst case scenario contractual guarantee through this insurance company that I will receive $50,000 per year until the day that I pass away. Well, depending upon all the different insurance carriers out there, you have over 300 contracts per state. So it's not just a one-size-fits-all product. we go and you call into the company and we say, hey, listen, okay, based upon your goals, we ask you a whole slew of questions. Call the 800 number at any time. What exactly is your income goal? What exactly do you want to see happen to your money? Do you want to utilize safety? Are you looking for more aggressive, risky? What exactly are your specific goals? At that point in time, we have out of the 300 different contracts and multiple types of strategies that are proprietary strategies for our office. We have certain options, A, B, and C. We'll tell you, okay, this annuity will do this feature. This other annuity is going to be better because it's going to be this feature, and this other annuity might be the best one because of this feature. And we basically stack them up. But this is after doing our due diligence and helping you out understand that you control the chips, that you have the power to go with any specific insurance company that you choose. It's just whatever is going to be the one that makes you place the smallest amount of dollars in there to produce your optimal result of, in this case, $50,000. So as that's happening, what used to occur with annuities back in the day is you would go take the $700,000, surrender it to an annuity company, and then they would pay you that $50,000 every single year, every single year, every single year. Well, if you passed away in a couple of years, the insurance company is going to win. They're going to be laughing all the way to the bank because they only paid you out, if you pass away after 3 years, they only paid you out $150,000, and now they're walking away with $550,000 of pure profit. And they leverage the law of large numbers and actuarial tables, understanding for a person that's age 60 that's a male or age 60 that's a female, how long is that individual going to live? Meaning, how long could we actually give them a guarantee of an income payment? That being said, now you had new types of annuities that came out there. You had fixed annuities, you had variable annuities, which I absolutely hate variable annuities. But you had fixed annuities, you had index annuities, and then after 2008 you had the hybrid annuity. And what the hybrid annuity does is it gives you a very large contractual guarantee through that insurance company that might say, okay, at age 65 you're guaranteed $50,000 per year to the day that you live or you and your spouse live till. And on the other aspect, you have your money, your $700,000 is still going to accumulate and flatline, not lose anything whenever the market goes down. Accumulate when the market goes up, not lose anything whenever the market goes down. So you have the best of both worlds scenario. And this is just a kind of a hypothetical example. Understand that there's so many different nuances with these types of product lines, but you have to understand that the leverage. Okay, it all comes down to leverage. You're going to hear me say this throughout multiple videos. Is the insurance company? They're looking for the individual to place money with them. They're trying to leverage the individual as much and the individual's money as much as possible with the law of large numbers so that they could then produce a guarantee back to that individual. But the insurance company is going to try to win out every single time. So when you have over 300 contracts, 290 of those contracts are going to be leveraged in favor of the insurance company. Now, you do have some specific, not necessarily loopholes, but specific niches that an individual, let's say if an individual is age 50 and their goal is to age 65, there's certain ways that we could find what the correct company is, what the correct contract is, so that this individual can leverage the insurance company and have that leverage that the insurance company does to the contract holder very minimal. And this individual is making out like a bandit at the end of the day, and they're really pressing up and they're really leveraging their chips the correct way and making sure that they're not reducing any part of safety, they're not reducing any part of growth. And when they have that specific contractual agreement that's coming to them, that income stream, that it's going to be the highest one out there, the highest one possible out of those 300 plus different types of contracts and over thousands of different types of scenarios and strategies. So it's very important that you understand the power of what an annuity could do for you, because if you're kind of have that question mark in retirement and you say, I don't really know, I had a financial advisor, they were accumulating money, but then I took a hit in 2008. I don't really know what's going on with my money. He tells me he seems like a pretty smart guy, but I still, there's still a big question mark there. How exactly can we try to put certainty in an uncertain world? And that's where you could leverage a tax-deferred annuity in the process, or different combinations of different types of annuities or safe money contracts, making sure that you could get from point A to point B successfully without that worry. To understand that, yes, okay, you might not be making, if the market's gaining you 20%, well, maybe you'll make 10% that year. But if the market crashes 20%, Well, then you're not losing 20%. You're going to be making 0% that year. You have that 0% floor, that 0% safety at all aspects. But you have specific contractual agreements, contractual guarantees through income riders, that specific types of annuity contracts allow you to have. It's just there's so many different ways to skin this cat, but the most important aspect is to be educated. To be viewing videos, to be viewing financial content. You could be viewing it online. You could be leveraging different types of advisors out there. One of the things that we do is we really hone in on retirement income planning. We specialize on that last leg. Those people that are age 45 and above. 45 and my oldest client's 96 years old. There's so many different product lines from that 45-year-old client to that 96-year-old client on what exactly you could do best and where exactly out of those hundreds and hundreds of different contracts, what are the top three that fit specifically so that this individual is going to be winning every single time, and you're not just throwing it into an annuity that you heard at a seminar that some advisor was pitching you at a seminar saying, oh yeah, this annuity is so good, it's the jack of all trades, because there's no annuity plan that's the jack of all trades. It's specific to an individual situation, and that's the best way that you're going to be able to leverage your opportunities and leverage your retirement income successfully, your retirement planning successfully. So once again, call the 1-800 number. It's 1-800-566-1002. We are A+ rated on the Better Business Bureau. We're accredited business. We've never had any complaints. It's because of our methodical process. One of the things when I set up this company, to make sure that I was giving individuals free content, I was trying to give them as much information as possible to give them the tools to help out and be confident in their retirement, to not just trust the advisor, but allow a specific path where the advisor and the client can work together and figure out the best solution for their particular situation. We have all the carriers. We have all the strategies. We understand. This is why we have a lot of national recognition, is because of the way that we do our due diligence, the way that we do our process. And if you give us a call, I personally know that you might be dealing with myself, you might be dealing with some of my other representatives that I've hand trained, but I know that you're going to be satisfied at the end of the day. And even if it's just for a secondary opinion, that it's definitely worth a phone call, and because it could really help you become happy in retirement. And that's what we're trying to do. There's too many different scams out there. There's too many different fluff, smoke and mirrors out there to to just basically trust random people. And that's one of the things that we try to do is we really pride ourselves on our due diligence, and we pride ourselves on our strategies and our little techniques to make sure that you're very, very satisfied at the end of the day. So once again, my name is Derek Afasi. I want to thank you very much for watching this video. Please make sure to subscribe to our YouTube channel, Retire Sharp, so you get the most updated videos. And thanks for watching, guys.